Hello, everyone. Welcome to Money Map. So today we are going to look at the migration of Nigerian local investors from equities to bonds. So if you have been following this channel, you realize we're talking about downward movement of prices on the local equity market in the last 1 week. And we have initially attributed this to a possible profit taking. Profit taking means that, okay, people whose stocks have appreciated in value, they needed to sell to make some profit. And so why? Because the federal government, through the debt management office, just released their offering for federal government bond. The next one, and we can see that the interest rates are quite high. So looking at this for 2027, that means those that will mature in 2027, the 10-year program. So Okay, so they opened this program supposed to be for 10 years, but since they are 10 years, so now that they are issuing, so that's why they said reopening. So the program has been going on, but they have been doing it in tranches, right? So if once they are issuing now and it's maturing in 2027, and that's going to be a 7-year bond. And so look at the price: 16%, 12.5%, 9.8% for the one for maturing 2035, and the one maturing 2045 will be 9.8%. Before now, you realize that the interest rates have been, in fact, around 1%, 2%, 3%, and that has forced the local investors, and we are talking specifically about the institutional investors, that is organizations that are managing large funds for people, like the pension funds, like the mutual funds. So they have been the one moving the stock market because they are pumping money to it, since the debt market, the bond market wasn't attractive. But that has officially changed from yesterday. And so that's why we will not be expecting any reversal in the equity market anytime soon. Now, let's look at what the debt management office, what they've done, or what is guiding their action. So they had this medium-term debt strategy for 2016-2019. So they published the results, and they're talking that, so initially they had the target of the ratio of public debt to GDP should be 10.35. They had the target of 25%. As at the end of 2019, they achieved 19%. Whether I should call that achievement a good thing or a bad thing is relative. So sometimes you don't want debt, sometimes you need debt to grow your economy. But really, so they achieved 19%. They also had a plan for the external, domestic and external debt mix. So they targeted 60% domestic, 40% external, but they achieved 67% to 33% external, which is, they call it a significant improvement. They also have a target for refinancing risk. So refinancing risk is that the risk that you may not be able to borrow money from elsewhere to pay off your existing loans at favorable terms. So you want to be able to see that if there is a situation you need funds urgently, you want to be able to borrow at favorable terms. Ended 10 years, 10 years, but actually they achieved 10.5 years. So on the average, those debt, they have 10.5 years in the maturity, the tenor of their various debt. So now they've set another target for 2020 to 2023, which they have already running. So they said that their new target is that public debt will be 40%. And as a matter of fact, that World Bank and IMF recommended the threshold of 55% for countries in Nigeria's peer group. And so they are trying to tell us that, well, that it's good for them to borrow more money because World Bank said 55%. What they will not tell us here is that debt to GDP is one thing, but debt to revenue is another thing. You don't spend GDP. If you are going to pay your debt, you are going to use your revenue. And so if our revenue, if it's tied to the dollar, tied to crude oil, anytime we have shocks in the crude oil market, Nigeria will always suffer. So we are at a very high risk, but that's not even the focus for today. We'll talk about that another day. So they also have target for the external debt to domestic to external there. So they're saying 70% domestic to 30% external. So that tells us clearly. So if we are looking, okay, so let's look back at what they achieved initially. So initially they achieved 67% domestic, 33% external. So now that the target is 70% domestic, so we expect that they are going to create more room for the domestic players to, and that would be by way of increasing the interest rate so that it can be attractive to the domestic players. So the refinancing risk, yes, they are also looking at the long tenure, 10 years, minimum 10 years and a maximum 25 years. That's what they are looking at so that they can manage their refinancing risk. So now, going back to the relationship between so let's look at how all this impact the equity markets such that people had to institutional investors had to be moving funds from the equity market by selling off their shares because they are the ones selling now. It's confirmed now that to move back to the fund, to the bonds. So if you look at the bond, I think it's opening on the 16th or 17th or so of February. So they are raising money to participate in the auction for the bond. Now we are going to look at the equity market tides, say over the last 5 years. So when we say tide, just like tide of the ocean, that's the larger breeze, wind that is blowing, deciding the direction of the waves. So you have waves, and these are, now let me break this down. Now, what we did here, we analyzed the coupon rate. Coupon means the interest rate on the bonds currently available, tradable in Nigeria, and look at them from 2018. So you can find this on FMDQ, which is another exchange for bonds and fixed income generally. So for bonds maturing in the next 2 years, when they were issued in 2019, this was their interest coupon rate, 11%, which you can also call interest rate. 2020, the average was 5%. And for the 3-year maturity, you have 12% for those issued in 2018. The bonds issued in 2019, they were issued at 12% on the average. Bonds issued at 2020, they were issued at 5% on the average. Now, to now show the relationship, what we have here is the performance of MSCI index component. So MSCI is a company that publishes indexes all over the world. So and many foreign investors, they follow what MSCI publishes. So they have an index for Nigeria. An index, which we have always explained, is a price that represents a number of stocks or any other asset as that you may have. So this particular index has 9 stocks in Nigerian stocks. So they believe that if you can capture these 9 stocks, it will reflect the direction of the overall Nigerian stock market. So, and these stocks are Guarantee, MTN, Zenith Bank, Nestle, Nigerian Breweries, Stanbic, Seplat, Boa Cement, because they always show Boa Cement must be a new addition because they review it periodically. Now, what you will notice now, this MSCI, look at the flow of their prices. So we are comparing them together and it's showing the relative movement of prices in the last 5 years. You will notice a general pattern, not minding that the companies are even in various sectors. We have infotech, telecommunication, we have banking, we have food and beverages, we have oil and gas, we have industrial goods. So yet they all move together. So these are their relative price movement in the last 5 years. So there are 4 major tides here, 4 tides. So within the tides you have waves, and these are real transaction, real volume. These pictures, they show real people, real transaction, real volume, right? So there have been 4 major tides in the last 5 years. So the first one, after we just came out of the recession, was the launching of I&E window. I&E window is the place where officially people can trade, and that place theoretically is supposed to have a market determined exchange rate. So if you are an investor, I&E means investor and exporter. So if you are an exporter, it means you are earning dollar. You are supposed to go to this market, offer your dollar for sales there. If you are an investor, so actually they are referring to foreign investors there. You are bringing dollar from abroad. You are supposed to put it there of, because when you are coming in with your dollar, because you want to invest in local assets, you have to change your dollar to naira. So put it an I&E window, and we expected that the I&E window will come up with a market price. So for a long time, look at this tide from about March 2017. So April, actually, I&E window was launched in April. Look at the movement, upward movement of the stock market up to sometimes June 20 to June 2018, up to sometimes. So money was coming in, and the foreign investors, they were the one driving it there, because they had confidence in the I&E window. Why? The exchange rate on the I&E window and the what's it called, black market, was almost the same thing. It was about 360 naira, even though the official price was 305, but the I&E window was about 360 naira, and they were happy because they felt that even if they want to leave the country with their funds, a market rate will make ensure that they do not suffer any loss in terms of foreign exchange losses. And that continued for a while, and the stock market really benefited. So they kept bringing money, and our stock prices, so you can see all of them. So in between the tides, you will see waves. So you see short waves, high point, low point. So if you are someone that trades in and out, you'll be making money all through this period, right? Now, there's something changed down here. At this point, not as if the I&E window ceased to exist, but President Trump started his trade war with China, and every time he tweets something, the global investment climate will be charged, and people were afraid. And they were, so for that reason, many fund managers decided to move away from emerging market, because they were not sure. They wanted to hold a very strong currency. So everybody was going for the dollar, and so they were selling off their assets in emerging markets like Nigeria. So that made, so gradually stocks were leaving Nigeria. I mean, investments were leaving Nigeria. So look at the tide. The tide is downward now. In between the downward tide, you can still make money by buying at a low point like this, selling at high point, buying at a low point. But if you observe something, except you sell and take away your money and go and wait, if you leave it there, even though you seem to make money, you see it will still go down, because it's called, the tide is larger than the waves. So you can make money on the wave, but because the tide is downward, you will, on the long run, if we are talking of those who are trading. If you're a long-term investor, you are just investing, you don't really care about all these things. You just want the companies to be doing well. So up to this point, so from that 2018 June, July, thereabout, up till about February, March 2020, it was a downward trend, downward tide, even though you will have waves in between that gives profit. So what happened? Another very powerful tide, but short, was COVID-19. Everybody sold off. The foreign investors sold off. Then the market recovered, right? Now, so that's the third tide. So finally, so at this point, almost every foreign investor, those who wanted to leave, they left, but many were not able to leave. Were not able, but they wanted to leave. Why? The CBN, there was no dollar available on the I&E window. Because what I didn't say here, that why the I&E window where exchange was close to the one of black market, the CBN was intervening. It was supposed to be a market determined rate, but if they really left it, if they have left it to be determined by market forces, naira would have been 500 thereabout. So the CBN was pumping money to maintain it at that 360. But at this point, from the COVID point, remember, crude oil price went down. The CBN could not do that anymore, so they left it alone. And so the foreign guys could not, convert their naira to dollar to leave, even though they wanted to leave. So because of that experience, they've shunned Nigerian market, and they are not even participating actively in our local investment anymore. We are talking of foreign portfolio investment. So what that means is that we are now left with only us and us, either institutional investors or retail investors. And institutional investors were also forced. So from this point, this also coincided with the time that interest rate was very low. If the CBN is issuing anything, in fact, we almost got to zero interest rate at a point, right? Because that was the right policy for that situation. Now that the interest rate was so low, funds moved from our institutional investors into the stock market, and it went up. However, with this new development of high interest rate, then this will stop, meaning that only the retail investors will play the equity market going forward, largely speaking. So we are going to have a downward tide again. That is certain. So most times the stock prices that we have today, for a lot of them, they will revert back to their average points around this when this trade war was going on. So whatever price that you had on the average around this second tide, that's the stock market will go back to that point. So that is what it is. So for so we don't make investment recommendations here, but that we just share, look at the facts and analyze it. For people who are members of our mentoring program IMAP, then we discuss the specifics. So we encourage you to join IMAP. Please click by clicking this link. The link will be provided on the description, where then we break it down. We mention stocks, we look at the prices, what we should do. That comes there. And so this is what we do over, and the program lasts 1 year. So everything that comes up anywhere, foreign, local, or any asset class, we break it down and we talk in specific times. Thank you for watching. Please subscribe to this channel, share. God bless you.